to see what the crowd is thinking about your favorite charts, symbols, both currencies, commodities, and indices. You can also check out the latest seasonal trends month to month, week of the year, and much more to spot potential opportunities coming up in the future. The Edge Finder also makes economic data much more easy to read, like our GDP charts, our retail sales numbers, PMI data. We can also check out the jobs data, unemployment claims, and so much more. At the touch of a button, you can check out the latest reports from the economic data that moves the markets. Right now in the live stream chat, we'll be dropping a link where you can speak directly to a team member about getting yourself set up with a copy of the Edge Finder today, and we'll give you a nice live stream discount. Click that link and chat with the rep to find out what kind of discounts are going on right now. Now back to the stream.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy, Tuesday? Happy Tuesday, September 10th. Let's get going. What's happening? Hey, Chris, how are you? Gary, nice to see you. So just kicking around a couple of things. Let me take a look at some gamma levels. Here's the SPY on the day. Price action fairly choppy for the first 20, 30 minutes. We had a nice little 5-minute candle to the downside. It's kind of a wash. I mean, we have a 27% call option volume, 36% put option volume. There's not really a big discrepancy there. Don't be surprised if the markets are just a little bit calm prior to CPI. We do have a potential, gap area that could be filling maybe tomorrow. I'm looking at a bit of a butterfly. I do have a butterfly spread on ES if we end up coming down to this gamma strike at 540. But we could also end up heading up to 552. So I don't really have a direction on the day. I think it's good to be a seller of options. Looking at the real time, 246 net to 247, it is equidistant. It's same level. So, this level to this level, it's a big question mark today. Obviously, I'll see if price, does support breaking a floor, maybe gravitating down towards these lows. Yes, no, maybe. I'm not really sure. So all I did this morning is just sold some options in the A1 session. You just saw that little ad for my alerts. I did hit a profit target overnight on the dollar yen. I'm still in the New Zealand dollar. Going to my index trades here, I did get actually no, this is a pending order on the NDX for a 919 expiration. This is a broken wing butterfly. I'm going after a $10 credit, which is pretty aggressive. This trade may not end up getting filled unless price does rally a decent amount on the NDX. It was trading for 85 cents yesterday, and I'm not playing games here with 25 and 50 point wide spreads. So I'm going to try to get filled for $10. That's $1,000 on the tail credit. The profit would look like this. So this would be current price. If I got filled on the trade, it looks something like this. I would collect. This would be my credit of $10, and then I'd have a profit trap of around $35. You can see that up there, $35. And then I'd have a risk here of about $15. So it's going to look something along these lines. If I put in a risk line, there's going to be my risk. So that's the risk analysis graph on the options chart. So this would be real price over here. And if price were to go higher, I'm looking to see if I get filled at $10 credit. It works its way up into my profit trap, which are just slightly above the all-time highs, which I don't think it gets there. That's my whole point of the trade. And if it somehow exceeded that, I still have, break even that's past that pinpoint at, 20,025. But anyway, I started just getting active yesterday, posted a couple of trades. So I've got index trade alerts, commodity trailers. This one's still pending on CL. Forex trades, my dollar yen hit profit. And then stocks, I cloned that index trade on NDX. And then futures, pretty aggressive here on futures. I took the CL trade. That's the same as my commodities. My ES is a butterfly spread that I'm in for today. I will show that trade in just a moment. And an MNQ, this is a hedge that I took with Frank yesterday in the session. So I went out to November. This is a micro Nasdaq trade, and I'm looking to the downside. So I bought an out of the money long put at 18,000, and I'm going after a pretty decent profit target. So I mean, this is really just to see if price is going to go. Let's go back to this chart here. Let's go SPX. Let's go MNQ for a moment. So we're trading at 18.7, and I put in the 18,000. So all that really means is if 18,000 here, if price gravitates towards this in the next 30 to 45 days, my expiration is 11:15. So I've got time in the trade, and I was willing to pay for the time, but I want to see if price can come back down to retest maybe support, which is around 17.6 or 17.5. I will take some profit on that hedge. So, maybe my hedge is going to pay me a couple $1,000s. Maybe we have some crazy vol event, which I doubt. I think the market's kind of contained from that. But anyway, that's where we're at. So just taking a quick glance at everything, news-wise today. Let's go to the calendar. Let's go to this week. News-wise today, it's pretty quiet. We had some news out of the UK this morning. But I don't see anything on the U.S. Tomorrow's the big day for the U.S. with a CPI year-over-year, month-over-month, and core CPI. This will be a big deal. I saw something this morning that the Fed might be undershooting, or actually seeing inflation undershoot. If you've ever used the Trueflation, let's see here. Let's go inflation index and see what this shows. 1.15. I mean, this trend has shown a pretty impressive drop. Where we thought we had some sticky inflation, and we have just been trending lower. So, having the CPI year over year show 2.6 forecast, I mean, I'm sure that the market's hoping to see a 2.6 or better, and then the Fed goes right in line with what they said, which is, inflation is trending lower, everything's going the right direction, time for a policy adjustment is now, blah blah blah, and that's all going to happen over the next month or so, right? So, this is a third party. So Trueflation measures their inflation numbers differently. It's obviously not 2.6, but you can see here the previous U.S. report was 2.9. It's forecasted for tomorrow morning on the year over year to be 2.6. And of course, I'm interested to see what that does with the market. Are we looking at the inflation report as something that gives the market a boost this week, or gives the market a further drop to the downside? I don't know, right? Maybe after last week's Tuesday, Friday sell off, maybe inflation doesn't really matter as much as employment right now. I mean, it could be a choppy market. We could it's up, down, sideways. It's just trying to position for a lot of different things. But point is, um, I think we're gonna have to wait and see. I went back to this. I think I did a simple layout yesterday. Let me show. Is it this one? I think it's this one. This workspace. Yes. Let's go to the SPY. So I don't think I would be surprised. I don't think any of you would be surprised if the market does end up falling down towards the 200 exponential moving average. That doesn't necessarily mean we have to break a bunch of crazy lows. It just means that we would have to see price do something like that. All right. After having mostly trends, mostly directions for this year, outside of an April correction, and outside of a mid July into early August correction, outside of that, this market has been pretty much straight up since Q4 2023. So dealing with a little indecision here would make some sense, because we have a lot of stuff that the market has to digest and figure out what's more important, right? Is the market really going to have enough evidence to break lower? Is it really going to have enough evidence to break higher? And part of me thinks that it's no, right? I don't think it's so. A huge retracement. Cedric says huge retracement. Is it? Is this a huge retracement? If we just go high, low, like that, is that a huge retracement? That's not a huge retracement. That's just noise, right? Like, look, we can have 3 to 5%. That should happen multiple times a year. This year we had less than 2% most of the time. Like every 1% pullback or any type of gap lower, the market just ripped higher. Every 1.5 to 2%, the market ripped higher. We finally had a correction that was meaningful, and it was what, maybe 6 to 8% in April. That high to low was around 6%. Okay, and then we had just shy of a 10% sell off in the SPY with that crazy vol event, and that was 9.7%. And then the futures market actually whipped a little bit lower because of that Sunday open. So I don't think that going down to find that 200 EMA for maybe a 4%, a 4 or 5% correction. I don't think going down that much is going to break the market. you know but I would say that I like it as an opportunity to then buy low. If this came down, I would be happy to do some long options there. I'd be happy to do some credit spreads. I'd be happy to do some income plays. I think that's a great spot, as opposed to this area is just, it's too easy for the market to chop around. It's too easy for the market to fake out. So I'm just gonna wait for my levels. you know and so I talked about this yesterday. I did put on a trade. Let's see here. And by the way, I'm gonna be going today on time, right around like 10:59, 11 o'clock. I'm gonna be bouncing out of the session. I have another webinar like right at the top of the hour, just for today. I don't think I have a bunch of those this week, but just for today. But I'm just letting Chandler and the team know. So if the trade I took from Friday was a 54.10 by 54.05. Yesterday, it was already at the 50% take profit, so I just took profit. And so I did have a nice little income play for yesterday. I took it on the SPX. I have my butterfly today in case price is going to fall down towards this. Be SPX and ES. So if price falls towards the lows around 5,400, I do have a butterfly spread that could be a pretty nice payout. I'll show that trade right here. So let me go ES 1, 2, 3. Let's go analysis. So there's the trade, right? So this is real price right now. So what I need to see for this trade to be profitable, and for me, like very profitable, is I need to see price fall a decent amount. So this is 54.80. I need to see like a 40 to 50 point drop today, and then see if this is a $3 debit. And if a $3 debit, this is a $30 credit, which is a crazy, crazy good run. But obviously price has to be pretty bearish today, and I don't know if it's going to get there. And if it doesn't, I just eat this and I reapply it for another time. you know so it is what it is. But yeah, I mean, the trade I took this morning was an easy little like SPX trade. Grabbed $100 out of that. I'll see if the butterfly works. If it doesn't, it's worthless. No big deal. I've got some broken wings. I've got all sorts of stuff. I'm playing around with it. So there you go. But back to the simplicity here. It's like, look, the 200 EMA is sitting right there. We didn't touch it on the ES feed, even though we had a long wick to the south on that like Sunday to Monday candle. I think it's very possible we just kind of slowly drift lower, but I look at it as a really good buying opportunity. That's just my outlook. I look at it as a great buying opportunity. If we can hit the 200, I'm willing to say, like, look, and maybe it spikes through it, right? Maybe we have like price, close below it, and then it turns into some type of morning star and then closes back above it. There's two ways to approach that. One is I will probably end up taking trades right at the 200 EMA, and then look to see that, give it time, give it maybe 20, 30, 40 days that we're up above that, and I get some income, or just hit a profit percentage. Or if you're looking to actually buy the ETF or buy the SPY, or probably be a SPY trade if you want to buy the ETF versus trading the SPX or futures. But you could, I mean, I wouldn't mind buying the futures contract and going out for maybe a week and see if the market actually heads up from there, or buying a call option on ES or MES, and looking at some income there. So it's either price closes below, closes back above, then you get long, or you just pick the level, right at this low, and you just put in a pending order to buy it. You put a stop loss, maybe one full candle below, or like an ATR below it, and then see if price rebounds, right? But I don't think we're making all-time highs anytime soon. Even if the market's all excited tomorrow about CPI, I don't think we're necessarily coming to rip and take out these highs. I think we're making slightly lower highs. We could, in fact, make slightly lower lows. And I don't think this would be a surprise for anybody as far as analysis goes to then have another push the upside. Remember how this happened last September? Okay, this market did almost the identical thing, where it was pretty much a range. Here's a channel. Last year, you can see that we went from high to low, lower high to lower low, lower high to lower low, created a channel, and then we ripped up through Q4 and onwards. Now, I don't know if it's going to be the same to the upside, obviously, once we see like this bottom in October, November, like we had last year, but we could see, I could see a wedge forming at these highs. Okay. And I could see this channel going a little bit lower at these highs. But to me, there's opportunity to buy low enough and generate some income here. Okay. Buy low enough again, generate some income here. As long as that persists, I will focus on that as my trade in the longer term. I'm looking to see, can we go higher? Can we hit 6,000? Not necessarily this year. Maybe we do, maybe we don't. But I'm still going to try to take my trades with a slight bullish bias and see if there's more left in the tank to the upside. Okay. I mean, unless the evidence suggests that all of a sudden price is breaking down in a big, big, big way. Like, let's talk about this. Let's say that this level breaks. Okay. Let's say that this market, takes out the low and just dumps aggressively. Then I'd be looking to fade a rally. I mean, that because then it's going to look a lot uglier. But if we just have it slowly, right, like slowly melting lower. So here to down, high to low, high to low, high to low, high to low, something like that. Just a bunch of indecision. Now, obviously, I'd like to see the breakout. I would be a little skeptical of a fake out just in case the market's playing around with some stops and manipulation, especially in the futures market. But I would be more focused on, can we get a catalyst to the upside? Okay, so that's my kind of S&P breakdown. The Nasdaq is looking pretty similar. I got some inner and outer trend lines here. If we did the same thing on the NDX, which is our Nasdaq feed, something like this, just some indecision. Okay, or if it's not indecision, perhaps it goes just a tiny bit lower with the channel. So is it high to low, lower high to lower low? I'm still looking at that as a buying opportunity to then get some short-term income to the upside. Right. So as far as, the way that I'm trading, that's what I'm looking at. I'm just going to be patient and, chill out on my levels. And if I get the lows tested, I'm going to be buying. Right now, I'm playing some hedges to the downside just over, over this month in October to see if that like market seasonality and all the data that we've got to digest. I mean, the market's digesting employment news last week, inflation data tomorrow and Thursday. Fed comes out next week with all the other central banks. We have the ECB on Thursday this week, which might cut 0.6%, which is a pretty substantial cut. And then we have one more round of inflation data, one more round of employment data, right? So, I mean, market's going to digest it. And we're just going to have to monitor price action to make sure that we're getting, good bid prices and good support structure at the lows, and hopefully generating some income or just waiting, right? I mean, honestly, maybe the best thing right now is don't overtrade, just wait, and price will eventually give us some wide open spaces to work with. Okay. All right. Any currency pairs you'd like to take a look at? I want to do some other stuff here. Oil, gold, silver. Volatility has retreated. Let's go this chart here. Let's go volatility index. So we retreated a little bit. 1968, we're down. I know Frank is still long volatility. I think he's out to October, if I remember that conversation yesterday. He's out to October. So if we see another like little vol event, then good. I think any volatility spike up into the 30s is maybe as high as we're going to get. I think that was it. Just wasn't the same increase. We talked about that. Like I want to look a little bit more into that with like what exactly is the takeaway from this is this was supposedly a mispricing of the VIX. So anyway, there he is. What's up, dude? How are you?
Pretty good. How are you?
Good, man. I was just about to jump into some oil, gold, silver. What do you got kicking around today, Frank?
Right. So I closed my GLD position this morning.
Okay.
I ended up taking that iron condor trade.
Nice.
I got it at 52 cents, and I collected about 30% of that.
Okay.
So I closed around 36 cents, or 38 cents, I think, actually.
Nice.
So that's what I got going on now. I have what else? I have a bearish call spread, which is the same thing as yesterday.
Okay.
On the SPX.
Okay.
It's a 5,500 by 5505. So if we don't break the highs of the day, I'll collect $1.05 credit.
Very nice.
And right now it's still around $1.90, just
okay.
Fluctuating around there.
Yep.
So kind of break even right now, hoping I can get full credit by the end of the day.
Okay, let me
That's
see.
pretty
this.
much what I got so far.
Okay.
And then the VIX call that I
Yeah.
still hold.
So just to put something on the radar for your SPX, you can see that I've got some kind of gamma levels all over the place here. So 5,500 to 5,510. You know, the bulls. I don't know if they're really going to go anywhere because it seemed like we have kind of equidistant pressure on both sides. So 54.50 to the downside, 55.10 to the upside. I mean, I like this. I mean, yesterday was a range day, right? I'm trying to think. We opened here yesterday and closed here, so barely a move of like 0.4%. It'd be like 0.4%. And then today, kind of the same thing as like a gap up, but just like, you know, maybe price is a little bit choppy today, not crazy directional as we're awaiting the news tomorrow. So yeah, I'm just throwing out there like the 5,500, 5,505, which is your trade. I mean, the good thing is we may have established an intraday high, and hopefully that stays, you know, safe for you. If it goes down to, you know, 54.50, I think your trade, I'm assuming it's a 0 DT, right? So it expires today.
Yeah.
Okay. If it comes down to 54.50, Frank, will you like message me in Discord and let me know where you're at? Like, because if it's a dollar, what'd you collect on the trade up front? $1 something?
$1.05.
$1.05. Okay. So if it comes down to 54.50 intraday, let me know what this $1.05 is trading for. Because number one, you don't have to do anything. You could probably just probability wise collect the $1.05. But I'm curious if this is trading for, you know, 25 cents, 30 cents, 15 cents. And obviously that's pretty good, but
I see what you mean. The volatility is so high. At least that's what's expected. So I'm not going to be surprised if it goes higher, but I'm also anticipating that we kind of just stay around this zone that it's created already.
okay.
So even if we get a broad sell-off intraday, I think it's going to come back. So I'm just kind of anticipating it to end up nowhere. And, you know, hopefully that's how it works out. But you see these past like several candles on the 5-minute chart are just kind of going crazy. So it's hard to tell where it's going to shoot for, but I think at least that it's going to sort of remain in this zone.
I do. I mean, I do too. I don't think with the big news coming out tomorrow that the market's going to do anything wild today, but you never know. And so my trade this morning was a little trade on SPX this morning. Grabbed a couple bucks there. I do have that butterfly trade on the ES. That would mean price would have to come down here. So if we did have a decent sell off today, then there's my butterfly trade. That would be, you know, awesome to get into the profit trap. But we'd have to have about a 40 to 50 point sell off today. I doubt that's going to happen. So I'm probably just going to eat that trade. I might end up issuing another one for tomorrow, but I might just do it after the news is out, because one thing that will happen tomorrow with CPI is this all prints at 8:30. So I'm gonna watch the futures market tomorrow and then see if I can maybe pin an ES trade with a butterfly spread. Like if it's a call side, put side, I'll probably do like the put side. I'll do like a put fly, and I'm just looking for price to get trapped somewhere. You know,
what do you think is going to happen? Like I was talking to Nick yesterday, thinking that this could be a muted reaction.
Yeah.
As we focus more on labor data, but 2.6 is quite a jump.
It is
quite a jump lower from previous. So I was wondering, like, if we hit that expectation on the year over year, are we going to see some? Do you think we could see some extreme bullishness in the short term?
Well, so I don't know. I mean, I don't know. August 14th was the last print. So I'm looking at the last CPI data, right? So as the market bottomed out, August 14th was actually a quiet day, and then the day after the market gapped crazy aggressively. So the actual news itself tomorrow, I have no idea if it's going to be a big reaction or not. I mean, it does seem like a 2.9 to 2.6. If we come in at 2.6 or lower, I think the market can get pretty excited about that. I just don't think it's going to be. I don't think it's doing this. I don't think it's taking out highs, right? So a move that the market gets excited about maybe pulls right back into this level. But that sell-off candle from Tuesday last week, that sell-off candle to me is, I don't know. I think that's enough to say like, hey, good try, bulls. Thanks for bringing it back to us. And then we stay in this kind of choppy zone.
Well, here's
I
what
still
to
think the
think
200
about.
EMA is an attractive spot.
So we all expect that cut this month.
Yep.
So if we get lower CPI, it hits expectations. This is the kind of the determining factor as to whether this cut is going to be a dovish cut or a hawkish cut.
That's a good question. So what do you say when you say hawkish cut? Is that 25 basis points?
I'm not
Hawkish
really
cut is no
considering
cut.
the amount. I'm not
Yeah.
considering the amount
Okay.
of the cut. I'm considering if inflation is higher, we're already expecting them to cut. That's going to be a hawkish cut. So that's
Right.
going to be kind of a bearish sentiment around that cut. But if we get lower CPI, and if it does drop this hard, that means we're on track. We'll probably see a 25-point cut, and that will be more of a dovish cut, in my opinion. So those are the differences. So cuts this month aren't necessarily going to be bullish, but if it's a dovish cut, then I think it's going to be more bullish than a hawkish one.
Yeah. Well, if the points aren't changing, I mean, obviously with FOMC on the 18th, there's a press conference to go with it. So I think what Powell does say will also matter to the degree of how aggressive, price is moving, good or bad. I think the Fed, as we've discussed, I think the Fed is wise to not do a 50 basis points cut because that shows that they're wrong. That shows that they miscalculated. That shows they're behind. And so I think 25 basis points is pretty solid. What I found interesting is the Fed's only talking about, and I believe their September 18th meeting should be a dot plot, or if not, like that's coming up this month. But we should see, like the Fed is, they're talking about way less cuts than what the market is. Like the market's looking at this thing dropping. I mean, we're at 5.25 right now, so let's go 5.25. Oops, let's go calculator. So 5.25 on the low end window to 2.75. That's a 2.5. I mean, that's crazy, dude. 5.25 minus 2.75. The market's looking at 250 basis points of cuts by next December. The Fed's like maybe a fraction of that, maybe 1.5, 1.25. So
Yeah.
I don't know. I mean, is the Fed, it basically is the market calling the Fed's bluff, where it's just like, look, you guys say that you're going to be, maybe this, Frank. If the inflation data goes from 2.9 to 2.6, and then there's another big jump through until we have the election, November 5th, right? If we have another round of inflation data, which we will, and that will be like a 2.6 to like a 2.3, 2.4, 2.2. I think that gets the discussion that we had before. I think it was yesterday, that the 5.25 that the Fed has right now to the actual PCE of 2.6, that's where they can bring it back down to normal. And so, I mean, if the market's seeing these big drops in inflation, that gives the Fed 2.6% of cuts, and the market's saying like, we think we're going to cut all of it, because the market's looking at this saying, we're going to be highest probability around 2.75 to 3%. I mean, hopefully PCE goes lower, hopefully CPI goes lower, and the Fed can hang out at like maybe a 2.5 to 3% interest rate. I mean, it's a ways out. But I mean, you just have to wonder, like, is the Fed doing this at the time where the market is like right on the brink of like, man, things are going to get way worse? Or is the Fed actually doing this at a time where the market's like, you know what, we're okay? And I don't know. I mean, I think that buyers out there and everyone talking recession, if everyone's talking recession, this is probably more likely. And it's going to be like the irrational upside that nobody expects. But if everyone thinks like, the Fed's going to figure out we're cutting rates, everything's great, I don't know. I mean, but maybe it's nothing. We have to remember it never happens, but maybe it goes sideways, dude.
On CPI.
What's that?
So I think it really just depends on CPI, because we have obviously cooler jobs data.
For sure.
So stagnant or higher CPI is going to be that stagflation question.
Yep.
That's the hawkishness. And then that will probably cue the Fed to go 50. So that's worst case scenario for stocks. But if we don't really move on CPI, like say we punch in like 2.8%.
Yeah, that's what I was going to ask you is if we're way closer to, not necessarily like let's say we miss, we go 2.7, 2.8, but we're still lower than 2.9. I don't know if the market's going to love that either.
I don't think it's going to be much of a reaction then.
Yeah.
'Cause
I
the
think for the
expectations
bigger
are-
reaction we have to have a huge miss one way or the other. So it's either 2.6 is forecasted, but let's say it prints 2.5, 2.4. The market might like that enough to be like, okay, there's a daily rip, but I still think that's hitting a lot of technical resistance right now. So I could see the short term rip to then I'd possibly fade that with some bear call spreads or just hang out with my broken wings, dude. I mean, these broken wing butterflies are fine because there's a profit trap. They're not out that far. And also, if price pushes higher, I have pending orders. I'm trying to get those filled at credits that I want to take, you know.
Yeah.
So, but if it's a miss, like let's say we print 2.9 again or 3%, I think the market's going to hate that. Even though the Fed might still cut 25 basis points, I think the market would act inversely or adversely to a higher, stickier print on CPI this week.
Best case scenario for me is if we rip lower.
I mean, look at oil, dude. I mean, oil is single-handedly probably the reason we're going to have a low inflation print. If we print 2.6 or lower, I think energy is a big part of that.
I was thinking about that too. I was wondering if I should punch in like a long trade there, but I don't know. Oil seems like it's going to break that floor.
Let me see. So right now I have my long hedge. So my $55 long puts up $1,100. I mean, I could roll this one. I've got some time in this trade. This is essentially like it's a naked put with a long put hedge, but my long put's not paying out enough to make it worth it to close it. But what I would consider doing is if I close out the $55 put, then I want to roll this out further. The issue that I have is I think I need that protection on oil just in case something worse were to happen. If we have like some weird price crisis on oil, I will be glad to have like the long puts out there. So I don't know. I mean, oil's it's a bit slippery at times.
Yeah.
So,
and what you're saying about falling oil prices making it a lower inflation number,
definitely.
That's a very good point there. The question is though, if we have oil tumbling and say CPI comes in at 2.9, that's going to be pretty bad too, I think. The fact that oil prices are falling but inflation is not. But I do think that it's a good indicator that inflation will fall.
I do too. I think this is a huge contributing factor to why I think inflation does come in. I mean, that the forecast is 2.6. That does seem like a big chunk out of inflation. If oil was still hanging out at $80, I would be way less confident that inflation across the board is improving. But with oil being down, I mean, oil's down, 20% in the last less than a month, right? I mean, this goes back to, hang on a second. This goes, so I guess a month and a half, we're down 20% oil. So that's going to contribute to a lot. I mean, I can't tell you that I've experienced it out here in a mountain state that's like 380 a gallon when I know that the national average is like 315, 320 a gallon at the pump. But there's decent support here, but I think this does play into the inflation story of like it's getting better. But I also wonder, is this a lot of manipulation going on where like they're trying to drive price on oil so much lower that does it become, a pain point for OPEC? Because one thing that typically happens as well is you have the OPEC put, which is like they will talk and say, hey, we're cutting crazy amounts of production. And then it's like a short-term jump in oil. But there's plenty of structure. I mean, I think that 65 is still pretty solid. And if we bounce from there, so be it. Maybe it's after this week that we bounce. Maybe that's all they're trying. I don't know. Who knows, man? I mean, this could be like some insidious plot where it's like we're trying to get inflation to 2.6 and show it's going the right direction, but the reality is like right after that it just pops right back up to 70, 75, but it's a month away. It's like we'll have another inflation report later. So I don't know, but I think inflation is going to be low.
You're looking for oil. If you're taking any long positions, like you said you had long puts, right? Is that it, or are you doing a
No,
whole
I have both. I've got to put at 65 that I'm selling. So that's my like I'm gonna roll that one so I can just keep collecting credit. But I have a doubled put on the long side. So here's my CL trade. So I sold the 65 and I bought the 55. So it's a hedge because I was thinking if we had the 55, where price is dropping aggressively, that 55 picks up a little bit more like gamma, and so I could maybe outpace that, and I could roll this put further out and possibly down. Because I mean, IV is pretty high in oil at 66.8. So anyway, we'll see. I mean, there's nothing to do on it right now. I mean, my break even is I'm trying to think what I collected on it. I'm looking at about a $600 income trade if oil stays above 65 by November. The nice thing is this is cash settled, so I don't have to really do anything, but I will monitor the prices because if I want to roll this, I want to make sure that I can roll it out farther and hopefully down in price if I need to stay out of the way and be safe. So that's the
I
plan.
want to talk about this too. The
What's that?
the 2-year and its reversion back above zero. The yield curve. So the 2-year plotted with the 10-year.
Yep.
This is something that I don't really hear many people talking about, which is why I'm kind of curious about it. So we spent like 500 something days inverted.
Yes.
And then
Longest
finally,
ever.
last week we crossed above.
Yep.
Today we're still hanging above that level. What do you think? Like, does this cause any alarm to you, or do you think this is like something to worry about a few months down the line?
I mean, the disinversion has always been in the past a problem, but I think just like we saw, let me zoom out a little bit. Let me see if I can zoom out just a touch right here. Right here, see how we got really close? Like we started like ripping up towards that inverted line, and so it went back down, up, and then back down, right? Because we had the labor market softening, this is why we then actually got disinverted. I think the issue is the disinversion has never been a good sign for the markets in general. But I also think that if we can stabilize employment, and we don't know this because it's still going to be data dependent, but if we stabilize employment, I think this happens again, Frank. I think this happens again, and so we actually go inverted again because the labor market tightens all over again. Not to like the extreme degrees of like crazy tight labor market, but I think we tighten enough that maybe this gets inverted again, and that gives the market like the relief to not like have to pay the piper and the can gets kicked down the road a little bit further. So I don't think this disinversion is going crazy high. If it does, here's what we need to watch. We'll watch the 2 and the 10. We'll see if the disinversion like starts getting way higher to the upside. And we'll also watch like the credit spreads. I'm going to watch JNK. I'm going to watch what we talked about at the end of the session yesterday. If our credit spread situation is widening, then there's a lot more risk coming in the market, and you'll see it reflected in the VIX, and you'll start to see price reflect that. But if we see labor market last week sucked, but we have another round of unemployment claims like every Thursday, so maybe it shows like improvements there. We could have things going into after the Fed go into that first week of October for non-farm payroll. Maybe there's for once in 2 or 3 months, it's like finally a good print in non-farm payroll. Maybe it's a revision that's positive, and I wouldn't be surprised if this actually, steepens to the downside. That makes sense. So I think I'm going to watch that because we had it in the past where we've had some inversions, disinversions, inversions, and it's still the market just grinds higher. So unless we're going way to the upside, I think there's a chance that this thing still tips down, points down because labor kind of tightens up a little bit.
Would a 50-point cut cause that reversion to go higher?
That's a good question. I don't know because it depends on how. I mean, really, prices between the 2 and the 10-year depends on which one gets. Moves the fastest. I mean, if we have a 50 basis points cut, that immediate reaction should affect the 10-year bond will be the most affected by that. But the 2-year, I mean, it just depends on which one drops faster. If we cut by 50 basis points, I mean, does the 2-year drop faster than the 10? I mean, more than likely, the whole point is investors are willing to go out longer and accept the risk premium, for longer duration. And so the 2-year, it's like if the 2-year drops faster than the 10, then we have the inversion or the disinversion rather that gets more to the upside.
Yeah.
Yeah.
Okay.
So I don't know if 50 basis points cut does that, but it's something I think we need to pay attention to. Yeah. It really is like, it seems silly. And so we could talk about all these things. It's like, I just don't know the answer to it. But I will say that I'm pretty firm on this. As I wrap up here, I've got to go like right at the top of the hour here.
Okay.
But as I wrap up for today, this is how simple I want to keep my trades. I'll take some income stabs here and there. I'll do some broke wings at the top. I'm just going to be patient, Frank, and fingers crossed that we actually see price gravitate down towards the 200 EMA, because I'm just interested in price, man. I mean, price historically, if all you did was bought around the 200 EMA, you probably made a fortune over the last 10 years, 20 years. You know, the problem is we don't hit the 200 EMA that often. So from this level to this level, I'd just like to see price just kind of hang out for a second, give us a chance to buy. And, I'm not necessarily looking to buy and hold the all-time highs. If I buy it and make some income, a couple trades like that look good, and then a fresh breakout, then we can be more bullish as the market maybe resumes. But we also, at all-time highs, if it goes sideways, there's going to be a floor here that may end up breaking. So I mean, this is a critical spot for the charts, the analysis, the conditions that we're in, the fundamental data that rolls in. And I think the market wants to edge higher because it typically always finds a way to ignore a bunch of stuff. But if we tip over, there's a lot of evidence that shows why it could, right? Labor's down, inflation is coming down, but the Fed's behind. The Fed miscalculated. They're cutting, which is never really sign of they're cutting because things are slowing down, right? So it's a bit of a brink. Like, could things get worse? Sure, but I think that it's almost too cautious out there and too bearish, especially after like the August 5th low. That I just think the market finds a way to like blinders on, like election. I don't know. I mean, is there going to be election drama? Maybe, but I think it's going to be too gridlock. It's going to be a gridlock. The unless there's a sweep. I think that's the only thing we have to watch for, is if there's a sweep of all blue or all red, then policy is up for a debate. And if policy changes the market, the market is affected by policy for sure. So, but if it's not going to be big policy changes, then nothing really changes.
I think outside of the election, we're like coming up with all these scenarios and figuring out what could happen, which I guess sounds pointless, but I think it's good to cover all the bases because we don't know what's going to happen. Really, any outcome from the Fed could happen. And it's just, what are we going to do in the meantime, and how are we going to interpret that? And I think it's good that we're talking it out because, I mean, even right now, I'm not like rehearsing lines of what I'm going to say. This is like me talking and thinking through what we might be doing in the future. Mm-hmm. So I think, examining all the different possibilities is really important. But
sure,
for now, I'm selling those credit spreads. I'm kind of limited on the upside and downside. I think there's going to be harsh swings, so the volatility is going to go higher, but that's a good time to sell calls and puts if you're kind of indifferent on price in the short term. But
yeah,
I think come tomorrow, we could see a really giant move if inflation comes in lower, or if we read like 2.9% or higher.
Right.
So,
yeah, I think we have to have a big whiff. Like it's either, crazy good and crazy low, or it is, we're way off. It prints, sticky again. So yeah, I say we digest that tomorrow. So, hey man, I know I usually never cut myself off, but I do have to run. I got a webinar like right now, so I'm going to pop over into that for a second. I want you to run the session by yourself right now.
Yeah.
That's not going to happen. So anyway, I want to do this again tomorrow. Let's have some fun tomorrow. I saw Revan there's like skipping everything. I mean, okay, so I'll come back and do it tomorrow. I'll also probably post a video for my channels and things like that. So look for the A1 Trading Journal, and I'll post on YouTube and Twitter, and I'll get a video recap. And I mean, it's a little bit of this. Hey, the market can do this and do this. I'm watching key levels. I mean, I'm not really forcing a bunch of trades right now because I want to see what price is really made of. I mean, oil's at support, but it could get a lot uglier. Gold and silver's pretty steady. Bitcoin, bounced back in a pretty decent way, a couple $1,000, but there's no crazy price where I'm like, this looks great. There's levels I'm watching, but I think we just have we have the market where it's like it's just waiting for stuff to digest. That's all.
Yeah, I
So, all
agree.
right, dude. I'm gonna let you go, Frank. I'll see you tomorrow.
Yep. Talk about this later, I guess.
All right, sounds good. Thanks, everybody. See ya.
Yep. Thank you.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.